Right now, over half of Seattle homes are going under contract in just 30 days. Inventory is stuck at a razor thin 1.8 months, and interest rates are holding steady at about 6.74 at the time of this recording. These are the three key indicators that are driving the Seattle's housing market, and they're all pointing to one thing. Buyers are back, competition is heating up, and spring 2025 is shaping up to be one of the busiest we've seen in years. I'm Jason Fox, and in this month's Seattle housing market forecast, we're going to break down what these three key indicators mean, along with latest prices, trends, and some expert insights to help you make smarter moves. So, whether you're buying, selling, or just keeping an eye on the market, but before we dive in, could you do me a quick favor? Would you hit that like button, subscribe, and turn on the notifications so that you never miss these monthly updates? Thank you. All right, let's get into it. If I had to describe Seattle's housing market right now in one word, it would be momentum. After a slower stretch last year, where high mortgage rates made both buyers and sellers hesitate, we're seeing a noticeable shift. It's like someone hit the resume button, and now buyers are back, sellers are listing, and homes are moving fast. At the heart of this story are our three key indicators I mentioned earlier. Okay. These numbers don't just describe the market, but they really help explain exactly why things are playing out the way they are right now. So let's first take a look at sales activity intensity. This is basically how fast homes are selling. And right now, 54% of homes are going under contract within the first 30 days of hitting the market. That's a big jump from just a month ago. What that number tells us is that buyers aren't really waiting. So we're seeing buyers who sat out most of 2024 waiting for those rates to fall, realize that waiting didn't make homes cheaper. Now they're jumping back in, they're pre-approved, and they're ready to compete. And when the right home hits the market, especially if it's priced under 1.25 million, it's not sitting that long. So for buyers, this means the luxury of sleeping on it is kind of going away. The homes you love today could be under contract tomorrow. For sellers, this momentum works in your favor if you price it right from the start. Homes that hit the market at a fair price are seeing multiple offers again in many neighborhoods. Now let's talk about inventory, because in real estate, it's about that supply and demand, and that's what drives the action. So Seattle's inventory is sitting at just 1.8 months right now. That's a hair up from last month, but we're still deep in what we call a seller's market. To put that in perspective, a balanced market would have about 4 months of supply. Okay, we're at 1.8. With inventory this tight, every well-priced listing is going to get attention. The competition is especially strong in that sweet spot between 500,000 and 1.25 million, where demand is highest. Buyers have more homes to choose from than they did last year, but it's not nearly enough to slow down the competition. And that low supply is also what's keeping prices climbing, despite the higher interest rates. All right, so that brings us to the third key indicator, interest rates. And they're holding, at the time of this recording, at about 6.74%. It's not low, but it's a slight improvement from the 7% and higher rates we saw in 24. And that little bit of relief is enough to bring more buyers back into the market. Many are also working with lenders on rate buy downs or asking sellers for closing cost credits to help soften the hit. For buyers, this rate environment means affordability is still tough. But many are realizing that waiting for lower rates could backfire if prices keep rising. For sellers, offering those rate buy downs or other creative incentives could help your home stand out, especially if you're in that higher price range or if you're competing with new construction. Of course, the natural question is, where are prices headed? And right now, the average Seattle home price is around $965,000, with single family homes averaging just over $1 million and condos around $704,000. Over the past 5 years, Seattle home prices have climbed nearly 30%, which is a pretty strong reminder that despite market up and downs, Seattle real estate has been one of the best long-term investments around. Even in today's market, where rates are where they are, buyers are realizing that locking in today's price might actually save money in the long run, especially if those home values keep appreciating. And if you're still renting, here's something to think about. The average rent for a 3-bedroom home in Seattle is now around $3,825 a month. And that's a 3-bedroom house. That's roughly the same monthly payment you'd have on a $700,000 home at today's rates. Except instead of building equity when you're renting, you're helping your landlord build theirs, right? We've heard that. For anyone planning to stay in Seattle for the next 5 years or more, buying still makes a lot of financial sense, even with the higher rates. And let's not forget, we're heading into the spring. This is the busiest season in Seattle real estate. We're already seeing more listings hit the market. But buyer demand is scooping them up almost as fast as they come on. So for sellers, that early spring window, right, before everyone else gets on, which we're running out of time, when everybody lists in April and May, this is often the sweet spot for getting those strong offers with less competition. And for buyers, acting early before even more buyers jump into the mix could give you a better shot at finding the right home without getting caught in a bidding war. So here's the big picture. Seattle's housing market is running on momentum, driven by buyers returning, low inventory, and prices still climbing. For sellers, this is your chance to catch that early spring buyer when competition is low and the demand is high. Just make sure you price it right. Overpricing can be the kiss of death, sellers. The key is preparation. Get pre-approved, maybe fully underwritten. Work with a broker who knows how to move fast and really be ready to write strong and creative offers when you find that perfect home. And if you found this update helpful, hit that like button, subscribe to the channel, and turn on notifications so you don't miss next month's market forecast. I'm Jason Fox. Thank you for watching, and I'll see you on the next update.